Hi, it's Paul Chan again, co-founder of DLBS. Thank you for coming back. Let's begin our next video together. Welcome back, everyone. We're going to start our video 3, and this time we are going to talk about the topic of technical analysis, which is a very important step before you could even decide what to buy or sell in terms of calls and puts. So here's today's agenda. We're going to talk about the purpose of technical analysis, followed by comparison between the fundamental and technical analysis. There are actually 81 types of technical analysis. And then we're going to talk about proper expectations of technical analysis, understanding chart movements. We introduce you to something called the moving average convergence-divergence, also known as a MACD or MACD, as well as something called the relative strength index, the RSI. And finally, something to make your life so much easier using a tool called options play. So lots of material to cover. Let's get started. So purpose of technical analysis. Remember, we talked about how option prices are linked to the share prices themselves. So when share prices rise, typically call options will rise, barring any surprises in terms of time decay or volatility. And likewise, when the share prices fall, option prices will fall as well for calls. And then on the other hand, if you bought a put option, but the share prices actually rose, then your put option prices tend to fall. And likewise, the flip side, if share prices fall and you were right, then your put option prices will rise as well. So you cannot make any decision on any of the 44 strategies until you've made an intelligent estimate of the share price direction, right? Quite obvious. And also very importantly is you need to have a time frame. Because all options you buy or sell have expiration dates. So unlike a buy and hold where you're living with that stock forever, here you do need to take into account time and time decay. And remember, always before you get into the trade, you have to have an entry and exit strategy identified ahead of time. The whole purpose is to remove emotions from your trades. Remember, we're not buying the shares. We don't own any part of the company. We're not taking dividends. We are trading movements in the share price itself. Plan your trade and trade your plan. It's all about statistics and probability. That's what we're focused on. So fundamental and technical analysis. Fundamental is what you typically hear on the news. It's what all these analysts, 6 out of 8, recommend buying or selling a particular stock. They look at overall economy, industry, financial performances, balance sheet, income statement, management of the companies, all kinds of factors. And the reality is, with the internet and how free flow of information there is, other than illegal inside information, all valuable data of a company is already publicly available, provided they're a publicly traded company, because they have to file reports every 90 days. So the reality is, as a retail investor, there is no possible advantage for you compared to institutional investors who have much more time and resources because they do this all day long. So one reason why I love options is because we are focused more on the technical, statistical movements of the stock. So we are focused on the technical movement of the stock as opposed to the fundamentals, because the fundamentals are really already factored in by millions of investors, both on the buy and sell side, into the price of the stock itself. So that makes our life so much easier because there's only 24 hours in a day. You cannot possibly do everything. So we will focus on patterns and trends. And the reality is, technical analysis doesn't necessarily suggest the past equals the future, but there are patterns. Every stock has its own unique characteristics and volatility and patterns. And we'll show you how to look at clues in these various patterns to help you trade ideas. So let's go back to our BlackBerry example. Here's a 12-month statistical chart that everybody's familiar with, and we talked about how to look at this. And a lot of people may find this bunch of squiggly lines rather confusing. So let's try to use an analogy. Again, my favorite is sheet music. So if you look at these sheet music at the bottom here, there's something called a time signature, and in this case we've got a 4 beat per measure. So every section here is called a measure, and there are 4 notes. 1, 2, 3, 4. And I could look at the 12-month BlackBerry stock chart in a similar manner. I will divide this by 4. Because unlike in music, where you've got 4 notes to the measure in this particular case, well, all stocks in the 12-month window have 4 quarters. And 4 quarters are very important in business because they do report earnings every 90 days. And if you coincidentally look at all those humps, sudden spikes up, sudden drops down. And it doesn't take a rocket scientist to guess BlackBerry had 2 good earning quarters and then 2 poor ones. So now you're starting to see how to dissect the chart and look for patterns. And also seasonal business. Not every company has a flat line equal revenue per quarter. Some businesses have more seasonal nature, and you may want to also go a little bit deeper in your analysis and compare the same quarter from a year ago. So the next step is to look at this from a very vertical perspective. And the vertical, I always like to use another analogy here, is the tennis balls. Everybody's seen a tennis ball bounce. And in tennis ball, the support is the ground, and in the case of the stock is an oversold condition. You notice there are several humps, all dropping to a certain low before there's some support, pushing the stock back up because it is an overbought, an opportunity for people to make more money. And likewise, there's something called resistance, or in real life we call it gravity. The tennis ball can only bounce so high. Typically, it's a rather consistent, predictable bounce unless there's some excess spin on it either way, or it hits an object that is not exactly flat, but otherwise typically is rather predictable. And if we take that concept, look at this. There's also something called resistance in the stock price movement as well. Now we put the two together, the vertical and the horizontal, and look what we have here. In a 30-day period, identified by the 2 blue arrows, the stock dropped from just under $18 to all the way down to $14.41. That's a 20% drop in 30 days. And if you widen the window a little bit more, it dropped 25% in 60 days. So this kind of gives you, remember the clue, that this stock has a behavior of being able to move 20 to 25% in either direction in a relatively short period of time, which helps you guide the nature of the stock. So understanding the vertical and the horizontal, which is the time window, very much helps your trade plans because you will be faced with numerous option choices in the option chain. And how do you decide how far out of an expiration date or what strike price? Well, these 2 factors, the vertical, horizontal grid system here, will help you determine that strategy that you have moving forward. The bad news is there are 81 types of technical indicators. So imagine using 81 indicators to determine your strategy for each and every stock or option you're going to buy. That really is not possible. So many will choose a few, and luckily the most popular are 2. That's the absolute minimum. You cannot rely on 1, but you can rely on 2. One is called MACD and the other one is RSI. We'll talk about those 2. And at the end of the video, we'll also show you a tool called Options Play that will use business intelligence and do multiple scans of every stock using a number of these indicators in different combinations. So imagine it is a high-powered supercomputer calculator that you and I could not possibly do with the human mind. So here are the proper expectations of technical analysis, and we must understand, and I'll use an analogy of the rockets of the old days. When landing a rocket used to be dropping it somewhere in the ocean and a battleship would pick it up. That's not very hard to do. But now Elon Musk with his SpaceX Falcon 9 is looking to launch and bring rockets back to Earth vertically on a barge. Well, that's much more precise, much more difficult. Same thing with stocks. Trying to forecast an approximate stock price long term is much more easier. But when you are doing day trading and you are needing the stock to be at a very exact price point in the very short term, well, the probabilities are low. So there's different strategies, different styles. And again, remember we talked about how no two options trader are alike. So understand precision and probability. Here's another one. Technical analysis is really not an exact science. It is like a weather forecast. It will never be perfect, but it's certainly better than 50-50, which is just pure guessing up or down. So it's all about probabilities. And let's say I took a bet and I say it never snows in Las Vegas. Somebody says, well, almost never because it did. Well, it happens to snow in Las Vegas once every few years, maybe 10 years at most. Well, I'd rather take that bet because I know I'm right much more often than I would ever be wrong. So let's look at the combined perspective on these chartings. So trade within the support resistance because whenever it goes above, you're hitting into new territory. The stock has never hit that high, and there definitely will be profit taking. So it's kind of like that snow in Las Vegas scenario. And there's always support at the bottom because the market has already determined a bottom price value for that company. And when you get into what we call an oversold condition, institutions will come back and start buying in. So let's look deeper at our first of two indicators that we're going to explore today. The first one being the moving average convergence-divergence, called the MACD. Some people just call it MACD. So at the top half there, we have, again, the BlackBerry 12-month share price movements. And then we've mapped out the MACD here. So the green line at the bottom of this window is what we call the 12-day exponential moving average, EMA. And the difference between the 12-day and the 26-day, and that's how this is plotted out. And there's a second one, you notice, a gray line, which is the 9-day exponential moving average. So when we compare the two, it actually will see there are 4 segments where the green is above the gray. And now if you shift your eyes a little bit above, have you noticed whenever the green line is above the gray line, there's upward price pressure. Now conversely, you may think, well, what happens on the reverse when the green line is below the gray line? And there are 4 segments there as well. And the same thing holds true in reverse. When the gray is below the green, shares prices fall. And this is an exercise you can try with a number of different stocks, and you will find is not an exact mirror of the stock chart at the top, but it is quite close. And because it's not 100% accurate, that's why we cannot rely on MACD alone, but it is quite helpful in determining the direction of the short and long-term movement of a stock. Here's another one. If you noticed, there is a scale on the right-hand side in the bottom right corner. It ranges from 1 to -1. And when these two crisscross closer to +1 scale, the stock tends to hit a new high. And in reverse, when the two are crisscrossing very deep down in the negative section, the stock tends to hit a new support resistance. but it does come back. So when you notice these habits, and all stocks have these habits, then you will start to be able to have a lot more comfort in knowing your strategies on how to trade each and every stock. Let's talk a little bit about supply demand. I'll give you an analogy here. We've got buyers at the top, sellers at the bottom. And let's say this particular market is making some sort of a product, and we start off at the equilibrium, a reasonable price manufactured by a reasonable number of suppliers for a reasonable number of customers. Over time, the product becomes popular and literally the number of customers has doubled, but the number of manufacturers is the same. So what happens? Prices rise. More people are now fighting for the same number of goods. So typically then suppliers will realize there is actually money to be made and more manufacturers enter this sector, and so now we balance out supply demand again and price comes back to the equilibrium. Over time, maybe a seasonal nature, the demand subsides, fewer customers, but the same number of manufacturers, so price has to drop to clear out inventory. And then maybe the season comes back and we have customers back to where it was, and price comes back to equilibrium, and now customers are really getting popular with this product, prices rise, more manufacturers come into an industry, brings prices back to equilibrium, and typically at some point all industries will merge and maybe one buys out another, so we have fewer suppliers, fewer supplies, prices go up, and now even more mergers, acquisitions, even fewer brands to choose from, prices keep going up. If this all makes sense to you now, let me join all these dots together. And does that not look like a stock chart? And that's exactly what all stock charts are. It's a measure of supply and demand. So let me introduce you to one of my favorite indicators. It's called the Relative Strength Index, the RSI. RSI here is mapped out at the bottom here, right below the BlackBerry 12-month price chart again. And I'm going to start with a 50 line right in the middle. RSI is a measure of overbought and oversold conditions, no different than the chart I showed in the slide just previous. And have you noticed, whenever RSI is above the 50 line, meaning overbought conditions, that drives prices up. And likewise, whenever the RSI line is below 50, meaning it's oversold, there's more supply than demand, and for the same reason, prices drop. If this makes sense, take a look at this one. Come back to 50 line again for the same RSI curve. And let's look at, on a long term, in this case 12 months, the area between the RSI curve and the 50 line. So here we're showing price movements up in green, and the frequency of the area where there's downward pressure. And if you just use a calculator with high school math to calculate the areas of these triangles and squares, just even using the naked eye tells me about half the time price goes up, half the time price goes down. So overall, in a 1 year period, this stock chart is pretty flat, and if you look at it, it pretty much is. So this provides a nice tool for a long-term outlook of the strength or weakness of the stock. There are others we could show you where the green far outweighs the red, and you'll see it's a bullish trend with the stock price continually going up over a 1 year period. And there are others we could show you the reverse, where there's much more red than green, and those stocks are just in a free fall, never ending. So you may wonder, where on earth do I get all these tools? Well, we're going to tell you one that's free at freestockcharts.com. We're not affiliated with them. All you need to do is use your Internet Explorer to access the free version at freestockcharts.com. And let me show you exactly what that looks like. So here's my particular login, and I've logged into BlackBerry. Mine happens to be a premium edition, so I have no advertising on my screen whatsoever. I can have the benefit of showing you a full screen. And the top left corner, I can see those 81 indicators I talked about. So let me close off the MACD and RSI to show you how to get into this, and I'm going to change this to XIU instead of BlackBerry. And nice beautiful chart here. So we can have 1 year, 5 year, year to date, 6 months, 3 months, 1 month, as short or as long as I like. I particularly like to start at a 1 year. If something happened 5 years ago is pretty irrelevant now. So let me add a MACD. And that's how I got the middle window. And I'm going to add an RSI. And there we go. 3 beautiful curves. And all the strategies and techniques that we talked about in the last 6-7 slides can be applied to this one just the same. So how do you handle 81 indicators? Well, you really can't. There is not enough hours in the day. So we are going to show you now a demo of options play that we talked about in previous videos. And remember, there are 3 panels to options play. The left-hand side are daily trade ideas. Middle section is the technical analytics. And the right-hand side is the execution. What do we do with all this information and how do we trade it? So today we're going to focus on the left and the middle. And we'll talk many times over and over with the execution on the right in subsequent videos. So we go to optionsplay.com. I log into my account. And occasionally, a few times a week, you're going to see a trade idea pop up with some suggestions. I'm just going to close this for now. And I'm going to change my symbol to BB for BlackBerry. And there's the chart. Now let's first move to the left-hand side. And you notice it says 48 ideas. Those are all bullish ideas. In fact, there's 105 on the scan list. And this is where the computer and the business intelligence has taken all 81 technical indicators in different combinations and ran multiple scans on all these stocks. And look at this. If I sort them by the bullish stocks, there's 48 of them. A score of 10 means it's the most strong of the bunch. Then I go to 9 and 8 and 7 and 6. These all in green means they are trending bullish. On the other hand, bearish means these are all very weak stocks. Look at the index. 1 score, 2, 3, 4, 5, and so forth. So options play already gives you 100 plus ideas to trade from. So let's go back to the middle panel, and I'm going to click on Studies, which basically is another word for all these indicators. And we could have our MACD plotted out just like we did with freestockcharts.com, as well as RSI. And we can analyze just the same as we did before. But the power of options play is it takes all these indicators and in real time it is running analytics in the back end to derive a technical score of 2. So imagine all the technical complexities of 81 indicators is boiled down to one single digit number. And again, right in the middle of the screen, for every stock we have a technical score. 2 is very weak, 1 is the worst, 10 is the best. So based on a 2 score, I may decide, I agree, this is a bearish play, of which the right hand side, the execution panel, would suggest either sell the shares, buy put, or buy puts vertical, and it even tells me the expiration date and put. Now let's try this in Chinese for our Chinese visitors, and I'll repeat this. Here's the bullish scans on the left with 48, and I will sort them into highest to lowest from 10 and down. Likewise, all the bullish play if I wanted to buy puts. And I'm going to sort them from 1 and down, see? And again, I can go look at my chart, my MACDs and the RSIs, and use this All 81 of these combinations of indicators are used by the computer to derive a low score of 2. So BlackBerry is trending down. And again, always look in the middle of the screen. Number 2, any language can understand 2 is weaker than 10. So if for some reason you want bearish, that's the strategy, but I'm selling 100 shares or buying puts and buying verticals. And that is the power of options play in a few minutes. And we will repeat this tool in much more detail in subsequent videos. So next you may ask me, well, how do I get this? Well, there is a free 1-month trial. And it's available in the 2 languages that we showed you. So go to either one of these links for whichever language of your choice. So to summarize, hopefully you keep continuing your journey with us and continue on to the next video. Remember, it takes time to learn, practice, and repeat. And in subsequent videos, we'll show you how to actually make trades using virtual accounts. Please, if you find these videos useful, tell your friends about us. And subscribe to our mailing list for updates and trade ideas at dlbs.ca. Welcome back. I hope you enjoyed that video and found it useful. Please remember to rewind, practice, repeat, and if you found it useful, please share it with your friends and family. See you in the next video.